Okay, hi there. In this video, we'll take a look at some recent trends in UK trade union membership. We'll consider how trade unions can affect both pay and employment, and crucially, from an A-star evaluation point of view, we're going to challenge the textbook view that union negotiated pay increases inevitably have negative consequences for jobs. First of all, a quick look at who the main trade unions are. It's apparent from reading exam questions from students that very few students are well informed on this issue. So if you are, that would be a massive bonus. Here are the biggest unions in the UK in 2017. Not much has changed since. Unite and Unison are the two biggest unions in the UK. And look further down the list, the National Union of Teachers, the Nurses Union, British Medical Association and University and College Lecturers. Union membership has fallen quite sharply in the UK. If we go back to 1995, only 1/3 of people in work were members of a trade union, and this has now fallen to below 25%. It may well fall below 20% in the years to come. And here's an amazing chart, really. If you look at the hospitality sector, that's hotels, hospitality, catering, etc. Never been heavily unionised, if truth be told. But look at the figure for 2017. Less than 3%, or one worker in 33, is actually a member of a trade union. So trade union membership has been and is in long-term decline. I think membership is now just over 6 million of a working population in excess of 30 million. Partly that reflects the increasing flexibility of the labour market. I think you'll be familiar with the growth of zero-hour contracts, for example. But it also is a consequence of deindustrialisation, the decline of heavy industries such as steel and shipbuilding and coal mining, and also the fact that the public sector, in part as a result of a decade of austerity, the public sector or government sector of the economy has got smaller. People are far less likely to be in a union if they're in a private sector job. Now, when you get a question on trade unions' impact on the labour market, typically it's about pay and employment. The influence of trade unions depends in part on the density, in other words, the percentage of people in a certain job who are members of a union. When that density is high, that tends to increase trade union influence on pay, particularly if they have credible threat power. In other words, if the threat of industrial action against an employer, even with existing legal framework, is significant. So I think a good example might be the London Tube drivers, who I think are still a pretty cohesive, highly unionised group, and they have credible threat power. However, I think it would be a mistake when writing about trade unions to imagine that 2019 is the same as the 1980s. So many students in their essays and exam questions go back to the 70s and 80s as if that's relevant to today. It really isn't. New forms of unionism focus less on wage bargaining, but much more instead on protecting employment rights in the workplace, for example, protecting pension rights, health and safety issues, workplace training availability, and crucially, tackling gender and other discrimination. I think it's really important in your labour market economics to avoid the assumption that trade unions necessarily negotiate higher wages. Unions who necessarily negotiate higher wages will always lead to a fall in jobs. A lot of students just dump a diagram on the exam paper showing a union wage and a fall in employment, and that's it. And this is lazy economics. It's also wrong, and I think it's quite important for your A-star analysis and evaluation to challenge some lazy theoretical assumptions. In many ways, trade unions, in fact, can negotiate with their employers positive pay and productivity deals. And you can bring some game theory into this and talk about a positive sum game, where unions negotiate, for example, a pay deal, but that does depend on, or is contingent on, improvements in workplace efficiency. I want to take you through some key A-star analysis diagrams if you get a question on trade unions. First of all, here's the classic diagram showing the wage at W1 and employment E1. The union might use their collective bargaining power to negotiate a higher wage W2. Now that reduces employment, other things being the same, or ceteris paribus. the extent to which the union benefits depends on the wage elasticity of demand for labour. Can you see that in this case I've drawn the labour demand curve is fairly inelastic, and if the coefficient of elasticity is low, perhaps it's expensive to replace workers with machinery, or perhaps the employer can pass on an increase in costs to the consumer. But if the wage elasticity is low, then they can negotiate a high wage to W2 here without necessarily losing a lot of jobs. This extra area here could be bigger than the lost wages from fewer people employed. The other aspect is to develop your diagram. So if unions negotiate with employers a productivity deal, then the value of labour to the employer may go up. As a result, the marginal revenue product of labour may increase, causing, other things being the same, an outward shift in the labour demand curve shown on my right hand diagram on this slide. Now if that's the case, the equilibrium employment level may rise, as will the wage per worker. The other aspect, of course, which some exam boards require you to know is the monopsony diagram. Let's just very quickly spend a minute or two on this to finish with. The monopsony idea is that the monopsony employer, a profit maximising employer, will employ E1 workers. That's where MRPL meets marginal cost of labour. The value to the employer is MRPL, but they only have to pay wage W1 because that's the labour supply curve, the average cost of labour. So in that sense, the monopsony employer can pay a wage below the marginal revenue product of labour, hinting at wage exploitation, if you like. While a union, of course, can step in to create a bilateral situation where you have monopsony power of the employer and potential monopoly supply of the union, if they have a high density. The union, for example, here could negotiate a wage shown by this green line here. Now this green line then becomes the marginal cost of labour, and it intersects MRPL here at employment level E2. So we've gone from this equilibrium here to this equilibrium here, showing on my cursor. A union might be able to negotiate higher pay and higher employment with a monopsonistic employer. This is slightly counterintuitive, but part of it is that if you negotiate high pay, the employer will train their workers properly and try and get a better value of output from them. So really quite important, better to understand the impact that trade unions have. Please don't write in general, very general, undemanding, unthinking terms. Trade unions are more complex than the simple economics we often see in exams are taken as given in that sense. Okay, trade unions quite an important A-level labour markets video, and hopefully this has been a useful revision exercise.